Hey everybody, good afternoon. We are live on YouTube, live in the VTF. What's up? Hope everyone survived the great sell-off of 2023. Today is December 20th. Always remember where you are on this day for this sell-off. I'm just messing around, obviously. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure. So I got into a very small path that I'm keeping overnight. And I've got some U-Pro and T-Triple-Q still on, but for disclosure purposes, there's a good chance that I will not be in them tomorrow morning. By tomorrow morning, there's a good chance that I'll be closing them out at some point here after hours. I've already pieced out a little bit after hours, just kind of what I'm planning on doing here. Though there's not really any appreciable bounce when the market closed. I thought we might get one of those situations that we sometimes get, where we close on lows and there's like a really quick uptick after the close, and that did not happen. We're kind of just sitting more or less at the price that we closed. We're down a little bit in the SPYs. Qs are up a little bit. SPYs are down a little bit. So that's kind of where we're at. Thanks, Bill. So yeah, let's jump in. Look at that big red sell candle on the market. It feels big, doesn't it? The S&P is down 1.5%, which is not small. The Qs are down 1.5%. The IWM is down 2%. So I mean, it's a big percentage move from the indices. We have moved into this negative gamma environment, so our ranges can increase now, and it's been a really big move. It's been a really big move. You know, I've been saying every day that this market's very hard to buy, very hard to short. I would not be surprised to see us melt up. I'm also not surprised to see us correct to the 80 EMA. All this is, I know this, if you look at this 5-minute chart, this is a really big sell-off, very matter-of-factly, for an hour and a half of trading. But all it really is, from a big picture perspective, is a move to equilibrium on the daily chart, which is very ordinary. Even though this is a damning candle, I call this a penalty box candle. It puts the market in the penalty box if you're a bull. If you were trying to be a bull still and look for further continuation on this market, which I'm not really sure. I mean, it's kind of hard to still be doing that at the prices that we were at and where we moved to, in my opinion. But if you were still trying to be a bull with this market, this is a big fat red stop sign for you. This is putting the market in the penalty box. It's a negative Maribozu. It's a push through failure at all-time highs for the Qs. We weren't quite there for the SPYs. And again, all it does, the market's not broken. It's not unhealthy. It's just a penalty box. It's just a pause signal. We want to see now if the market can create some sort of higher low in this equilibrium area, or if this push through failure is the beginning of something more, similar to what happened back in July. Back in July, we had a push through failure, which was the technical topping signal for that high in July, which we called for perfectly. And I felt really confident that high was going to be a high that led to a more serious pullback, and that was the truth. I'm not convinced necessarily that this high from today is going to be the start of a much bigger pullback. I just think it's still a little bit too early here in December to be looking for that. But a technical correction down into the equilibrium zone is not unhealthy. So what caused this really big sell-off? Well, we're still trying to figure that out. It does not seem to be a news event. It seems to be technical in nature, in one form or another. What you got for me here, Bill? Yes, that's what I was seeing. I'm gonna go back to that chart in a second. So again, there was no news event that came out, as far as I'm aware, that caused this. We started dribbling lower, and then we really accelerated. And now what Bill just posted here in the VTF is a tweet from Spot Gamma that I'll just bring into my my screen share here. It's a 0 DTE driven plunge in the S&P. You can see the spread here between bearish 0 DTE flow, which is teal. I don't even know what color teal is identical to that of all flow purple, informing us that the bulk of flow on this downdraft is all today's expiration. Yeah. So it seems like someone just, you know, bought a huge 0 DTE put position, and then we're in this, you know, negative gamma environment, and the dealer hedging on that caused a huge sell-off, which if someone's big enough, I was thinking that even before the market closed, if someone's big enough and has enough money to be able to do that, I mean, we talk about sometimes, just to use as an example, we talk sometimes about how, you know, traders go crazy over their stops getting triggered, especially when they get shaken out of positions. And people love to have their conspiracy theories of like, oh man, you know, they knew where my stop was and they went after it and they triggered me. And I'll tell you what, they don't know where your stop is, and if they did know where your stop is, they don't care where your stop is for your little puny 100 shares or 1,000 shares or, you know, whatever it is that you think you're trading. They don't care. But they're smart enough to be able to say, hey, you know, we know that on a bull flag pattern, this is where everyone's stop losses are, and then it just becomes a math problem. The math problem is how much selling does it take to actually cause us to move the market to where we expect so many sell-offs to be able to go off based on our, you know, machine learning, artificial intelligence robots that can, you know, figure this out with a reasonable, you know, probability and dollar amount. Let's drive it down to that price. Let's trigger the stops coming in the other way, and let's make money off that. It's just a math problem. And I almost feel like if you have enough money and you understand the market environment and you're in a negative gamma environment and you understand how 0 DTE options can affect the market and what the dealers on the other side are going to have to do in order to hedge those positions, that you probably could put the position on and like be almost guaranteeing yourself money because of what you know is actually going to trigger in the market. And I was hearing this before it closed, that it was like an SPX 4700 or 4750 0 DTE that was an out of the money position when it was put on. I don't know on what size, but on huge size. And again, I think that if you had the mathematical capabilities and the money behind it, you could probably just basically figure out a math formula where it's like, hey, if I take this 0 DTE options position, I know that the effect of me putting the position itself on is going to be enough to drive the market in such a way that the position actually makes me a ton of money. And again, I'm speculating here. I don't have very much information. I basically just have a little bit of hearsay that I was hearing before the market closed, and combined with the tweet that Bill here in the VTF just posted from Spot Gamma. But if what I'm speculating is correct, it's brilliant. It really is. It's brilliant. And again, obviously, you got enough money to be able to put the trade on. But it's just incredible to me. So, you know, there's nothing structurally wrong with this market. And then the interesting part, and this is kind of what I was trying to say into the close here on when I was really deciding if I wanted to actually keep some U-Pro and some T-Triple-Q long, which I have some right now, but the truth of the matter is I really don't want to keep any of that long. I still kind of want to be very light in the market like I've been, and then reestablish things soon when I think things reset up. The interesting part will be what the market actually does tomorrow. Because if that's a 0 DTE bearish position that came on, the effect on that position should technically already be over at this point, in which case we could immediately, you know, be snapping right back tomorrow via a gap or via immediately trading up. Or or markets work in feedback cycles, and this degree of selling actually causes some other selling to be able to come into the market, which is definitely what was happening on the small time frame today. On the small time frame today, there was the market was working in a feedback cycle of selling. Selling was leading to selling, which was leading to selling, which was leading to selling. And again, there was no news on that. I took a stand into this ADMA for the first on like the first test of it, which really came about at this 305 candle, and that's when there was still an hour left in the day. I just cluttered some bids in UPRO and TQQQ at a small premium above the ADMA on the daily, just figuring that into heavy 5-minute selling extension into the daily ADMA, it'd be a strong spot to get a small time frame bounce. I got a little bit lucky on my fills, and the trade worked out great for me. The low in UPRO at that time was 85 cents. I got filled at 91 cents. I sold the entirety of that purchase into this up move within the next 12 minutes or so. And in TQQQ, the low was 70 cents, and my bid was at 71 cents. So, a little bit lucky to get the fill. No one can time this degree of a down move that perfect, but the idea itself was straightforward. I just laid out a couple bigger bids, and I had a couple bids lower than that also. I was leaving room to piece in. I just put out a couple bigger bids in front of the ADMA on the daily into that extension. And if I didn't get filled on this, and this is what I was typing into the VTF at the time, if I didn't get filled into this first down move, if this sort of bounce happened without me getting filled, I would have canceled those bids entirely, because then the trade is gone as far as I'm concerned. So that was good, and was able to trade that decently well, which made up for I did not have a great morning this morning. I was basically 0 for 3. I guess you could say I was 1 for 4, but on my one winner, I never got any size because I bought it pre-market and then never got any size, which was this WW. I made some money in. I paid up to like $8.75 pre-market. I wanted to get more, but it never gave me the chance to get more. So I made a couple dollars there, but my losers in Tesla, Nvidia, and Marvell are significantly more than what I made in WW, which obviously is not the way trading is supposed to be. But I never had a real position at WW. I never had any actual size on it, whereas I had my full risk in Tesla short off the open, off of its relative weakness. The trade there was 2 days ago. We had a shooting star. Yesterday we had an inside day. So that's an interesting pattern when that happens. If the inside and up happens, it's a great way to negate the shooting star and can be a really positive trade. If the inside and down happens off that, you're getting continuation. So I was trying to cheat off the inside day to be able to short off that. And it was a decent trade, but the market was acting really strong, and then this thing got super strong, and I got pushed out of it, and it was relatively weak off the open, but I was never able to cover my risk, so I took the full loss. The other trade I was looking at was in case the market was going to melt up again today. Nvidia had just pivoted off the ADMA on the daily again, was getting tight in front of 500. I thought if the market was going to do that kind of crash up scenario, that Nvidia could lead just a trade. I'm not marrying the stock. But I thought if this thing really got above 500 today, that it actually could be a huge trade. So I created a game plan for myself that was extraordinarily greedy. I thought I had an incredible risk reward, and totally failed. I sold a fifth of my position into this up move into 500, not even less than that, a sixth of my position, I think. And then I got stopped out on this candle here, which I was initially annoyed at because the market ticked up immediately after. I thought I got shaken out, and of course later I was happy I managed my risk, and that's why we always want to manage our risk, and managing risk is key to success in trading and the business. So that was a straight failure for me, and finally, this Marvell was a straight failure for me. Breakout through $60 with a lot of repetitive bull flow coming in. I missed the trade, so I actually bought it a little bit on the way down here, which I hate doing. Basically, it means I turned a break-even trade into a loser. It's not something that I recommend, and then that failed. So I just had 3 straight losers today. Basically, it wasn't great, and then I was able to make a few bucks into the close in this TQQQ and in this UPRO, which I now see as probably the word is spreading that this is not China invading Taiwan or anything overly insane, that this was just market dynamics from 0 DTE options. I can see that the market here is already upticking, and I'm not allowed to say if I'm trading when I'm on YouTube, but so I may or may not be getting filled on some of those offers into the close here right now. Bill here, and then I got to go because we've got Pat on Conversation with the Pro Trader with Greta today. But Bill giving us an update on our chart here. At 249, there was a $4 million VIX call, but right as the VIX was at 12.95. Oh, interesting. So it broke through the 13 handle there. This chart is the VIX real-time deltas. White's the VIX and orange is the call delta. Interesting. Okay. All right. Oh, I'm gonna jump, guys. Just a quick update on a really interesting day. Could maybe be VIX short squeezed a hair. I don't know. Yeah. But for now, it's just expired already, I think. So I don't know if that'll create any lasting effect on the VIX, which would be interesting because that's the beginning of the type of trade that I want to be looking for on the VIX to be able to get heavy on that. I see you VIX is already down ticking here a little bit. All right, I'm gonna jump in 3 minutes and 2 minutes. Patrick is gonna be on Conversations with the Pro Trader on LinkedIn. I encourage everyone to tune over to that. Have a great night. See you tomorrow.